This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everyone. Live across Bloomberg platforms. This is Bloomberg Businessweek Daily for, yes, it is Friday's Eve, Thursday, September 25th, 2025. Carol Massar, Tim Stenovec. And we are seeing stocks definitely off their best levels. They're in the red across the board. Those Mag 7 names really weighing on the trade today. Yeah,
Charlie Pellet's going to have the details, but seeing red across the screen, as you mentioned, Carol, the NASDAQ Composite down a full percentage point right now. The S&P 500 down 0.9%. The Dow down 0.6%. Tesla taking a real beating today as a result of what we heard from Europe and car sales happening in Europe. Tesla, a very small portion, less than 2% of car sales there.
You know who isn't taking a beating is Intel. This stock is one of your top performers in the S&P and the NASDAQ 100. It's up for a third day. We're going to get into why, oh why, might Apple actually want to invest in the company? We'll get to that in just a moment.
Plus a view from the C-suite on that and more with Cristiano Amon, the CEO and president of Qualcomm. He's going to be joining us in just a few minutes.
We've got the CFO of Affirm, Rob O'Hare, is going to be in the house. We'll get a view of consumers, what they are up to, and then leveraging AI to transform women's health. That's all coming your way in just a moment.
First up, though, a check of the day's trade and top business stories. Here he is, Charlie Pellet.
Thank you very much. Lower across the board right now on the equity market. Do want to begin with a developing story involving TikTok. We had the headline moments ago here on the Bloomberg Professional Service. Oracle, Silver Lake, and MGX will be the main investors in TikTok. That's according to CNBC citing sources. The three will have a combined 45% ownership of TikTok. Again, developing story right now, headline on the Bloomberg. Stocks in the red right now. Stocks are falling as valuation worries overshadowing data this morning, showing that the economy is holding up. Those numbers, the economic numbers, not having much of an impact on Fed bets, but bond yields kept rising after a weak Treasury sale. We've got the S&P down 59 at 65.78, drop there of 0.9%. Dow Industrials now down 290, a decline of 0.6%. Tech selling off. NASDAQ down 1%. NASDAQ 100 index also down 1%. But our Mag 7 index, as Carol mentioned, down now by just about 1.5%. The 10-year at 4.17%, with the 2-year 3.65%. Gold up $9 the ounce, up by about 0.2%. And West Texas Intermediate crude oil WTI 64.78 a barrel, down now by 0.3%. Amazon has agreed to pay $2.5 billion in penalties and refunds and change its process for how to cancel its Prime subscriptions to settle a lawsuit by the Federal Trade Commission. Amazon down by 1.1%. And Starbucks plans to close stores and eliminate 900 jobs. Again, recapping, stocks lower, S&P down 62, drop there of 0.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So shares of Apple, little changed. In fact, they're just up about 0.3% as we speak. This nearly 24 hours after the Bloomberg exclusive that Intel has approached Apple about securing an investment in the company, according to people familiar with the matter. It's all part of efforts to really bolster a business that's now partially owned by the U.S. government. So Apple, little change today. Not the case, though, for Intel, rallying another almost 6% in today's session. And we saw the stock rally yesterday as that news hit late in the Wednesday trade.
Okay, so the story got many, we think it's safe to say, including us, asking why, oh why, would Apple make an investment such as this? Remember, it's just reporting that Intel has approached Apple about this at this point. That's what we have. So we wanted to bring in Mark Gurman because we're really curious about what he's hearing. He's Bloomberg News managing editor for Global Consumer Tech. He is the Apple guy. He covers this company so closely. He joins us from the Bloomberg Los Angeles bureau. Mark, what are you hearing about this?
From a technology perspective, you guys are right. There is no reason for Apple to want to invest in Intel. But from a play nice with the Trump administration and its do more manufacturing in America standpoint and investments there, it's a great idea. Apple obviously wants to be on the good side of the Trump administration and the White House. There are several things that they want from Trump. They want Trump to help them push back against the EU's Digital Markets Act. They want Trump to help them reduce their tariff payments, right? So they need all sorts of things from him, not to mention the DOJ lawsuit that's supposed to go to trial in 2027. They want his help getting that thrown out. And so they can make Trump look good by investing in Intel. Obviously, the U.S. government now owns a tenth of the chip maker. Obviously, the U.S. government wants to show its constituents that it has Tim Cook and Apple, the poster child of American innovation, they think, playing nicely with them and partnering with them. So from that perspective, it's just about looking good. From a technology perspective, Apple is very likely to never use chips from Intel again. The chip has sailed. The ship has sailed, I should say there. The chip has sailed too, if I'm being honest. They're all in on TSMC-based production. They're all in on processors based on that ARM architecture, not the x86 architecture that Intel uses. Obviously, Apple dropped Intel from its computers half a decade ago. But there are some less advanced chips, low-end nodes, as they call them, not the advanced processors that you think of as SoCs or chips in iPhones and Macs today, that Intel could theoretically, produce for Apple. Apple already sources billions and billions of types of chips and components inside devices that no one's ever heard of or cares about that Intel could theoretically manufacture at some of their facilities for them. There are other things like chip packaging that is not a high-tech process that they could work with Apple on. So there are angles there, but for all intents and purposes, if they do this, it would be lip service to make things even nicer between Apple and the U.S. government rather than improve technology for the company.
We'll call it CEO presidential diplomacy, if you will. But having said that, Mark, at the same time, doesn't Tim Cook kind of have a fiduciary responsibility to do anything in this environment where if you get negative attention from the White House, it can be problematic for your company and certainly for your share price? So does it also kind of make sense to play nice in this environment? And probably CEOs do it to different degrees with all presidents.
You have to thread the needle if you're Tim Cook, right? On the Trump administration, Donald Trump is obviously very divisive, right? I think that is the most obvious thing that anyone has said on your radio show in a year. And Tim Cook has to do what he can do from a fiduciary standpoint to make sure that they're paying less tariffs, to make sure Apple is safe as a business. But there's also the element of employees who are not pro-Trump and customers who are not pro-Trump, and the legions of people who find it, I would say, gross or disgusting that Tim Cook is as close to Donald Trump as he appears to be publicly. I think that I know, and I think that a lot of people know, that a lot of this is just diplomacy or a game to some extent, trying to make the company as effective as possible, trying to save as much money as possible, and just doing his fiduciary duties as a CEO. But there are a lot of people who don't recognize that. And so this goes well beyond the potential Intel investment, but it's certainly a balancing act that Tim Cook has been having to try to strike for a while now.
Ryan Gould, who was part of the deals team, I know you worked on this story too yesterday, Mark. He was part of the deals team that worked on this story as well. He came on our program and he referenced Tim Cook at the White House just a few months ago and the multi-$100 billion commitment to invest in the U.S. that Tim Cook made there. How does this fit into that number in the hundreds of billions of dollars? I think up to $600 billion at this point. Or how would it? How would it? Not how does it? How would it?
I mean, within that $600 billion that they've earmarked, a lot of those are chip-making companies. And so any investment they would make in Intel would just go into that pool. The most interesting thing about that $600 billion number is that it's an eye-watering number because it is eye-watering, right? It's A lot of it is reality, and some of it are probably things like stock buybacks and dividends and what have you to people in the U.S. and buying back shares in a U.S.-based company, right? So it's not like they're writing $600 billion worth of checks to different chip makers and investments and such. So it is pretty interesting, and I think it goes back to what Carol said about this being CEO and presidential diplomacy. And, Apple did some of this with prior administrations. There were similar announcements related to American manufacturing and American innovation with President Biden. Steve Jobs was close to some extent with President Obama. They overlapped in their 10 years there. So certainly this is not abnormal. I just think this is getting more attention because of the divisiveness to some folks about the Trump administration.
So I know your focus is on Apple, but from an Intel perspective, does this money, and shares of Intel this year have absolutely surged up 64.5%. A lot of that has to do with the investment that the U.S. government made, or the ownership of the U.S. government. Of course, the Nvidia investment too, the news there. But I'm wondering if this changes fundamentally Intel at all, and if Apple were to make this investment, if this would help Intel take on some of its rivals and actually move into the AI era.
It's funny. In some cases, an Apple store, you go to an Apple store in a mall or in a particular city, and they get really big tax breaks in some cases to put their store in that mall. They get discounts for putting their store in the mall because the mall sees it as a driver to bring people into the mall and get them to shop at the particular store, right? And so my point being that a partnership with Apple could make Intel look really strong and good and as an innovator, and potentially get them customers, right, from other companies as well. And so the Apple brand is so strong that it can have a positive, layering effect for Intel. And I think that is the play there in addition to the funding.
All right. I have a silly question for you, but, here we go. Is it possible Intel could have called up Apple, Mark, and they're like, yeah, we don't want to talk to you? I mean, would they do that? Or is there kind of a Silicon Valley, hey, yeah, we are all always talking to each other?
They're always talking to each other. I mean, they show that they have an enemy-like relationship with Meta, maybe with Google on one hand and Amazon, but all these CEOs and all these executives of all these tech companies are interlinked socially, business-wise. Their spouses know each other. Their kids go to the same schools with each other. They're all linked together, right? There's no getting away from that. So like on the surface, they may show these bad relationships, but there's no declining a call from another CEO at another company. They all know each other. They all text.
All right. Okay. That makes sense. Hey, listen, so on that, I'm just thinking about the H-1B visas and what President Trump has talked about in regards to this. And we've been talking a lot about the impact on the tech sector. I am curious what you are hearing. What's Apple's exposure on this?
Yeah, this is terrible. Honestly, this is terrible. It's not like, so let me take a step back here. The reality is that other countries are producing great talent, countries like India. And I think it's a good thing for America to have the best talent, no matter where they come from. And I think Apple agrees with that specifically. And, the other thing to note is that the Indian community at Apple, from what I've heard, is up in arms about this. There are a lot of people on H-1Bs, a lot of people trying to get green cards. Apple spends a lot of money to help that make that happen. And the engineering talent coming from places like India is just, supreme. There are many executives at Apple. The COO is from India. The CEO, the COO's deputy, his eventual successor, is from India. Some of their top software engineering executives are from India. So they have a lot of talent from outside the U.S. And Apple is only Apple to some extent because of the talent they have been able to bring in from across the globe. So for Apple, this is a terrible thing. I would say for American innovation, right? American innovation is not only made by Americans, it's made by people who chose to move to America from other countries for a better opportunity and to have an impact. So I don't think this is a good thing at all for Apple, Amazon, Google, Meta, or any of the tech companies, or quite frankly, the country.
And we do have a story in the Bloomberg. I just want to point out that a bipartisan Senate duo is pressing Amazon, Microsoft, other companies on their use of H-1B visas to hire foreign workers with specialized skills. So all of that going on in the background.
Hey, we're speaking with Mark Gurman. He's Bloomberg News managing editor for Global Consumer Tech. He joins us from Los Angeles. Mark, more on the H-1B story. You know, we saw so many tech CEOs just a couple of weeks ago at the White House at that dinner. I was surprised to see a decision such as this from the president, given that it would affect the companies that these individuals run so negatively. Why don't you think we've heard a collective message from the tech community on the H-1B visa issue yet?
Oh, I mean, Tim, you know the answer to that. It's because they're scared of Donald Trump and they don't want to push back on this H-1B visa issue only for Trump to hit back at them with tariffs or starting to charge Apple more tariffs than they're already paying today, right? I think they are worried if they fight on this issue, they'll come back and be hit harder on other issues, maybe issues that they consider more fundamental to their lobbying efforts. You're not going to see Apple push back publicly against this H-1B issue. They would have done so already. Instead, they're going to work with lobbyists and other groups behind the scenes to have them do their bidding for them, but you're not going to see them push back publicly. That's not going to happen.
All right, we're going to leave it there. Hey, I'm so glad, we are so glad, Mark, that you could lay that out for us, both on the H-1B visas, but also Apple and an Intel possible link up. Mark Gurman, he's Bloomberg News managing editor for Global Consumer Technology. We're going to stay on the tech world because we did have some headlines involving TikTok. Yeah,
Oracle, Silver Lake, and MGX will be the main investors in TikTok. This according to CNBC's David Faber. He reported this on air. He cited people familiar with the matter. Oracle, Silver Lake, and MGX will have a combined 45% ownership of TikTok. That's according to Faber. Looking at shares of Oracle right now, Carol, down about 5.8%.
All right, we're talking TikTok. We just talked about a possible Intel, Apple kind of tie up there with our Mark Gurman. We want to stay again on really the tech world and even that tie up or possible tie up. We've got the head of a company that's one of the world's biggest sellers of the chips at the heart of mobile phones, including Apple, which is its second biggest customer, at least according to Bloomberg data. Great to have with us Cristiano Amon. He is CEO and president of Qualcomm. He joins us from the Snapdragon Summit in Maui, Hawaii, along with our BTech co-host Ed Ludlow, which you can find on BTV every day at 11 a.m. Wall Street time. Ed out there in our San Francisco bureau. Gentlemen, great to have you both here on Bloomberg Businessweek Daily. Cristiano, I want to start with you. I got to ask you, Apple is, according to our data, your second biggest customer. What would a possible Apple-Intel tie-up mean to you guys?
Look, there's no relationship. And actually, it has been widely reported for years now that over the next few years, I think Apple will stop, getting chips from Qualcomm. And the company has really moved on not only what we're doing within the Android ecosystem, but we're now in PCs, in automotive, in industrial, in robots. We're even into the data center. So Qualcomm, it's a different company right now. We continue to execute on this strategy, and there's really no relationship.
But in terms of a tie-up, do you think that's even something likely, that there is some deeper relationship between those two companies?
The way I think about it, and like I don't know details, but I can only see two possible angles. One possible angle is Intel continue to invest to become a foundry. In that case, as we are a fabless company, we welcome more foundries. Today, we manufacture our chips with TSMC, with Samsung, and if Intel has the capability to become a competitive foundry in America, we're very happy, and we will look at them as a manufacturer. As far as from a product standpoint, I can't really see a connection because Apple have their own processors.
And we want to get on to other stuff. One more question, though. How are you feeling about the government investing in Intel? I don't know, would it be fair for other companies, even a Qualcomm, to say, wait, what about us?
Look, my understanding of this is there is there is an overarching strategic topic, which is manufacturing of semiconductors. And I think we know, and it's been widely reported, that Intel had a struggle to compete with companies like TSMC and Samsung. So anything that is driven towards enhancing the industry manufacturing capability, especially in the United States or even other places, so we have a more geographically diversified manufacturing, that's actually good news. We're looking at the big picture.
Cristiano, like the thing definitively that's changed is the landscape in both PC and mobile. But I really want to start on the PC bit. I look at what's come out of Maui, generation to generation from a year ago. And what's really clear is you want to push even deeper into Windows-based PC. Could you just explain like how the generational updates on the tech help you do that and why it's important?
Yes, and I wish you all here with us. This is actually not bad place.
We wish
all.
we were there also.
Yes, this has been day 3 of a lot of announcements, all the chip announcements. And one thing that we're actually very proud. I think, as I said, earlier to Carol, I think the company is diversifying. We're building products for many different industries, and PCs is one of the growth vectors of the company. So we announced our 2nd generation PC. We just entered this market. And in our 2nd generation, I think people are seeing one of the biggest leaps in performance from generation to generation. We have 40% improvement in the CPU, 80% improvement in the GPU, and we actually have the very first processor in a thin and light laptop running at 5 gigahertz of clock frequency. But the real news is the amount of AI performance. I think the transition of phones and PCs to AI is happening, and those chips are designed to do.
Cristiano, I don't want to make statements because, like, I'm the journalist, and as you know, I love to ask you questions, but I go very deep on what's happening. And so, like, there's an acceptance that this is edge technology that's deployed in the real world. But I kind of want to hold you to how it's going. In February, you basically said that in really specific category, Windows PC priced $800 and above, I think you said you had 10% market share in that. And I'm looking at the specifics of what came out of Maui in the last 3 days. Do you have an update on the ownership you have in that market, or what this latest gen of chipsets will do to push you deeper into it?
Yes, this is a great question. We are, as we're new in this market, and it has been, it's actually, we can leverage a lot of technology. It's actually accretive, I think, to Qualcomm. And we're tracking to what we said. We actually only launched this, you see PCs with our chips in the United States in the top 5 European markets, and we're tracking about 9% right now. I think our projection was by 2029 to get to about 12%, very reasonable. But what is exciting right now, and that's, I think, in your question, is the edge AI transition is happening. Actually, the foundational models now are being designed so they have cloud and edge working side by side. And that is actually creating an opportunity for us to accelerate. And it is reflected in a number of designs. We actually, a while ago, just a couple quarters ago, we talked about having 100 designs across all the major PC OEMs, HP, Dell, Lenovo, Acer, ASUS, Samsung. Now that number is significantly higher, and we're seeing the excitement.
To Carol's question, I think it's fair, like the Nvidia Intel product collaboration puts this emphasis back on x86 against ARM-based chips. How are you tracking the penetration of both in the market? If you're going to react to that Nvidia and Intel deal and how it changes the market, you must also be tracking it in that context. How you are pushing into that territory.
Yes, when you actually, and I'm gonna quote to you when you just said, when you actually dig deeper on it, and it was interesting actually when that announcement happened. It was interesting. We were slightly up. It was kind of neutral to positive to Qualcomm, and we saw, I think, the market stock reaction on ARM, on AMD, and then Intel was up. And the way we actually look at this, we're incredibly excited. Because what it basically means is, I think it's Intel is sending a message that their integrated GPU and their AI products are, they're not going to, likely not to continue with that, because that's what the market is seeing. It's going to be Nvidia. So then, as Nvidia comes in to the integrated GPU market, combining their GPU with Intel x86, he started to bring AI into the PC market, and that is the moment we've been waiting for. And I think that's what we do. And I think the Qualcomm DNA is anything that is battery power, is high performance, low battery life, and a lot of AI. That's where we want the market to be.
So Cristiano, sell us on this moment, because I think a lot of people's experience with AI so far has been LLMs, and LLMs that you can use on your phone, LLMs that you can use in a browser. So if that's the way they are experiencing AI, why will they think that they need to buy a computer that is specialized for AI?
Okay, so this is a little different, and I wish I have time to walk you through all the details. Maybe that's an invitation for you all to come here, I think, next year.
We'll be there.
Okay, and, we're done. We'll come.
Yes, but I'll give you some very simple data points. The first thing is we used to learn how to interact. We had to learn how to interact with your phone, interact with PC. But now with AI, whether it's what we say, what we write, what we see, the computer knows how to interact with us. So the user interface is changing, and the user interface actually runs where the human is. It runs on your phone. It runs on your PC. So we're starting to see right now, and you see Microsoft doing that with the agents. You see that Google doing that with the agents. Then now the computer has this agent ready to interact with you as your assistant as you do things. That's the first thing that is happening. The second thing that is happening is there is incredible amount of processing power that is available. And as companies starting to see AI getting scale, because now it's about not just creating AI in the data center, I need to deploy it, I need to make money. They realize that you can leverage all of this computer. It's transparent to you. It's the wrong thing to talk about AI is cloud or is edge. It doesn't work like that. Just think, for example, if you're Office 365 customer, you have cloud and you have a client. And AI is going to be deployed like that. And companies are saying, if I bring this to the edge, my cost goes down, my latency improves, and I have privacy. And that's what we demonstrated. Many ISVs starting to deploy AI on PCs and in phones.
All right, going to leave it there. Glad we could get that time with you and really cover a lot of ground. Cristiano, thank you so much. Enjoy Maui. We certainly wish we were there. It's a pretty great day here in New York City. Cristiano Amon, he is CEO and president of Qualcomm, from the Snapdragon Summit in Hawaii, along with BTech co-host Ed Ludlow in San Francisco. Check him out every day with Caroline Hyde there on Bloomberg Television at 11 a.m. Wall Street time. And be sure to check out Ed's reporting out on this story.
Hey, we are just a little over 90 minutes from the close of U.S. equity trading. Stocks, well, in the red, but off their worst levels of the session. Charlie Pellet watching this closely. Let's get a business flash with him. Hey, Charlie.
Thank you very much. Tim Stenovec sums it up nicely after the bell. Of course, going to be hearing from Costco, just talking with the folks from Qualcomm. Qualcomm shares down now by 2.4%. The Dow, the S&P, NASDAQ, all in the red right now. Tech's being hit especially hard. S&P down 43 now. It's 65.95, down 0.6%. And trading below the big round number of 6,600. We've got the Dow down 208 right now. Drop there of 0.4%, while the NASDAQ Composite Index down 0.7. NASDAQ 100 Index also down 0.7%. And our Mag 7 Index, so that's a lot of tech stocks tumbling today, with the Mag 7 down by 1.2%. Your 10-year now at 4.17%. The 2-year 3.66%. Gold up 0.3%. 37.47 the ounce. And West Texas Intermediate crude flat on the day, $65 a barrel. CarMax lower after the company reported a surprise drop in comparable sales as buyers had rushed to buy vehicles in the previous quarter ahead of a tariff on imported cars. We've got CarMax shares today. They are trading lower. CarMax down now by 19.2%, plunging there. Also Carvana, it is up 0.3% after earlier losses. And Penske Automotive Group down by 1.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, buy now, pay later is everywhere every day, as it feels like. You've got companies like Affirm, Afterpay, and Klarna. They've all brought installment payments into everyday life, while big banks and tech firms are also now racing, Tim, into the space.
We talked about the growth and growing competition recently with the founder and CEO of Affirm, Max Levchin. He joined us just a couple of weeks ago. Shares of Affirm, by the way, they're on a tear, up 30% year to date. The company provides a window into the consumer and health of our financial system. So when we were given the opportunity to talk with another key member of the C-suite, we certainly jumped on that. We got Rob O'Hare with us. He's CFO of Affirm. He was featured in a recent edition of the Bloomberg CFO Briefing newsletter. He joins us from San Francisco. By the way, sign up for that newsletter, bloomberg.com/CFO-briefing. Also with us is Nina Trentman. She is Bloomberg News Senior Editor. She writes the Bloomberg CFO Briefing newsletter. She's here in the studio. Rob, that's exactly where I want to start with you. How the consumer is doing. It's a question we posed to Max a few weeks ago, but you guys have real-time data. You're seeing at every moment how people not just are spending money, but how they are with paying it back. How's the consumer in the U.S. doing?
Well, first of all, thanks for having me. In terms of the consumer data that we see, we see a consumer that's strong and healthy. We are originating, over $100 million of loans every day, and right now, all of the repayment data that we see in our daily loan cohorts, it's all really strong, and it's exactly in line with our expectations. So that tells us that the consumer is healthy, and that tells us that we're setting the right underwriting posture in our business.
Rob, how about delinquencies in the business? Are those ticking up? What are you seeing there in the data?
No, I mean, we manage credit. That really is job one internally for us, and we stare at delinquency data. That's part of the repayment data that I was alluding to, and we're seeing outcomes that are exactly in line with what we would expect.
Just wondering, with the Fed cutting interest rates last week and indicating that there might be more cuts to come, how important do you think that is for your consumers, and also how important is it for your business?
It may be helpful for consumers, right? It may reduce the consumer's total costs of credit, which I think is beneficial for them. For us, though, we actually like the rate environment that we're in today. We're very profitable as a business. When we look at loans on a unit level, we're sort of at or above our long-term ranges. So we feel good about this rate environment. If rates were to go down from here, it might be a modest benefit for us. Not all of our funding that we utilize is floating rate in nature, so there could be a lag effect to see any sort of real material benefit. But I think one of the great things about Affirm is that we can be adaptable and we can excel in any macro environment.
One thing we want to ask you about is that Bloomberg Intelligence, our own research team, Rob, has put out a report this morning, and they're projecting that Affirm will surpass 30% growth this year, to ahead of consensus. So just talk to us, if you will, about some of the drivers here when it comes to volume drivers.
Sure. I think it's important to remember that our outlook for fiscal 26, we have a June fiscal year. We've established a minimum GMV for the year. So we don't have a range out there. There's no high end to that estimate. So certainly we put out a minimum number for GMV, and we would hope to achieve that, just given that it is what we think a floor for the business. Closer to home, for Q1, we're guiding that we see about 37% growth in the GMV line in the September quarter, and that would be down from the 43% that we had in the June quarter. So both metrics, I think, are quite healthy and quite strong, and we really like what we're seeing in the business today.
Hey, very briefly, can you just tell us a little bit about the Affirm card? 10% of your users are on the card. Tell us exactly how it works and the profitability on the cards portfolio. Is it better than conventional buy now, pay later?
Our card is slightly better profitability than our business at large. That really stems from the fact that the Affirm card is a repeat usage product. Most of our consumers come to us through one of our merchant integrations and then look to deepen the relationship with Affirm through some of our direct-to-consumer products like Affirm Card. So there's a lot to like about Affirm Card, both for us, but for consumers too. It puts all of the utility, all of the financing and flexibility that we offer through Affirm. It puts it on a card, and it allows consumers to transact in places that today Affirm doesn't have quite the level of coverage that we have on e-commerce. So we see a lot of usage for Affirm Card in store, in brick and mortar situations. And you can also utilize Affirm Card quickly and easily at merchants where they don't have an Affirm integration yet.
Yeah, Rob, we're unfortunately running out of time. Maybe just 30 seconds just about the growth in your space. We've seen Klarna recently go public. Like, and how far is that potentially boosting even attention to the space?
We think it's good for investors to have multiple providers in the space so that they can compare and contrast across us and Klarna. I would say our space has been competitive for several years now. We really haven't seen a change in competitive intensity. So, we're focused on driving our objectives, and right now the business looks incredibly strong from our perspective.
All right, gonna leave it there. Rob, thank you so much. Rob O'Hare, Chief Financial Officer of Affirm, featured in a recent Bloomberg CFO briefing newsletter. A new one, by the way, out on Sunday. Find it at bloomberg.com/CFO briefing. And of course, always our thanks to Nina Trentman. She's Bloomberg News Senior Editor. When we come back, AI and data science and global health philanthropy. One view when we come back on Bloomberg Businessweek Daily.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ, they're all in the red, with the S&P down now at 6,600 even, lower by 37 points there. Drop there of just about 0.5%, back above 6,600 barely, but indicative of moving off session lows. We got the Dow down 176, now down 0.4%. NASDAQ, the composite index, down 129 for NASDAQ, a drop of 0.6%. Our Mag 7 index down 1%. Today we are seeing tech stocks selling off. The 10-year 4.17% with a 2-year 3.66%. Gold is up 0.6%, $37.57 the ounce. West Texas Intermediate crude up 0.2%, $65.13 a barrel on WTI. And Bitcoin right now at 109,607 on Bitcoin. It is down by 3.5%. Xiaomi's billionaire co-founder has unveiled a $630 smartphone that's designed to take on the just-released iPhone 17, underscoring the Chinese company's broader ambitions to take on American rivals from Apple to Tesla. The Xiaomi 17 will be offered in Pro and Pro Max models. ADRs of Xiaomi, they're up now by 4.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. It is time now for the Bloomberg Business Week Women's Health segment, where we focus on key issues and developing technologies impacting the present and future of women's health around the world. And I got to say, the world of women's health was rocked a little bit this past week.
Yeah, President Trump created a potentially existential crisis for Kenvue, the maker of Tylenol, with just 3 words about the company's most recognized product. He said, "Don't take it." The Trump administration is linking Tylenol's active ingredient acetaminophen to autism and urging pregnant women, Carol, to largely avoid the medication, although decades of scientific research have yet to identify a single cause for autism.
All right, let's get more, though, into the bigger, broader picture of women's health. Dr. Joan LaRovere is with us, Interim Chief Medical Officer at Boston Children's Hospital, Director of Innovation and Outcomes. She's also co-founder and president of the NGO Virtue Foundation, which is delivering healthcare in over 25 countries. So she has a big global perspective here. She joins us here in studio. Dr. LaRovere, so nice to have you here with us. How are you?
I'm great, Carol. Thank you so much for having me today.
There's a lot we want to talk to. You're in town with everything that's going on. We're looking at global health with global leaders. I do need to ask you, though, about what we got from the administration this week, the Trump administration, the president on pregnant women taking Tylenol. I'm just curious what it's been like, and I know you've been in New York, but what you've been hearing from your team back at Boston Children's when it comes to this news and what they're hearing from patients and what the guidance is that you're giving them.
Absolutely, Carol. Well, firstly, at Boston Children's, we don't take care of pregnant women. It's a children's hospital, but
right.
This obviously encompasses women and children. And I myself don't take care of autism patients. I'm a pediatric cardiac intensive care specialist. But I am hearing from my clinical colleagues that they are getting calls from families, and creating confusion around this is really a challenge. And we're really sort of taking that head on in terms of addressing the questions of families as they're coming to us.
One thing that we've noticed about this moment in time is, and we spoke to a doctor from the American College of Obstetricians and Gynecologists earlier this week, and there's this tension between what we're hearing from professional organizations as far as recommendations go and what we're hearing from the American government and the HHS. And it doesn't seem like that's happened in the past, where you don't necessarily have the government aligned with these professional organizations. I'm just wondering how you're thinking about this moment when it comes to healthcare.
It's a challenging time for healthcare, and I think we just stick to our mission that we are trying to provide the best, safest, most effective care to children that we can.
I am also curious, like we said, you're in town, and we've had the benefit of talking to global leaders about some of the big issues that are out there, whether it's climate change. We've talked a lot about AI this week, but looking at healthcare from a global perspective, I want to bring you into this because you're very involved when it comes to the applications of AI in medicine. Talk to us about kind of where we are today with it and kind of where it can go.
Absolutely. I think we're at one of the most exciting times in healthcare, and I've been involved with AI with Virtue Foundation for 15 years. And never has it been like this moment in time, because I think that the tools that are now unlocked, particularly now with Gen AI, cloud computing, big data, we're seeing use cases that are much more actionable than before and at an enterprise scale.
What does that mean? Break it down.
Well, I can break it down in the context of what we've done with Virtue Foundation. I'm happy to talk about some of the hospital use cases too. But in terms of Virtue Foundation, 15 years ago, Dr. Ebi Alahi, my colleague, was in Burundi. And he was there caring for patients and had this eureka moment where he's like, we should have more granular data on the ground to understand what my eyes see. And I should be able to see it here in New York to be able to action on it. And at that time, people are like, what are you talking about, right? It was very early days. And we started that journey of trying to first get the granular data, visualize it geospatially. But I think we've grown up as the technology's grown up. And I think key leverage points for us have been partnerships with Databricks, DataRobot, Carto, and I can break down one now if it's helpful. Yeah.
Well, and talk to us about data, because, you know, especially when it comes to the developing world, if you have data and information, you can assess a situation, then figure out what to do.
Yes.
So talk to us a little bit about that. You do have partnerships with Databricks, as you said, DataRobot, Carto. What are you guys building together?
We are building the marketplace for global health philanthropy.
What does that mean?
So you can actually see what is happening in healthcare facilities and what is the work of healthcare NGOs on the ground in low and middle income countries. And we've used AI. In particular, we've built an enterprise-grade pipeline with Databricks, where we're extracting all the data that exists and co-locating it to a geospatial location. So you're a hospital, a Korlebu hospital in Ghana. Everything that's out there information-wise is co-located geospatially to that organization. And you create this vector graph, this knowledge graph, with all these mini knowledge graphs that tell you what's happening in each of those facilities.
At the end of the day, this is all about improving outcomes, and it's helping people live longer, healthier, happier lives. Do we have the data yet that shows that this moment in technology is leading to better outcomes?
I think that's what we're on the cusp of. Would I say that we're there and it's all, you know, completely functional and moving? No. But that is the direction of travel, and those are the tools that are enabling us to do so. For now, I can see this data in ways I couldn't see before. I can send the right teams to the right locations.
Well, what are the better outcomes that you envision? I mean, are we talking about longer life expectancy in the developing and the developed world? Are we talking about lower infant mortality? Like, what are we talking about here?
I think we're talking about all of it. I think eventually economic development will solve some of our problems. But in that window in time, how can we shorten the time it takes till we get really more developed healthcare in these markets? And we feel that this VF Match platform, this actionable data initiative, will allow you to be able to use this information, whether you're a healthcare NGO, whether you're a government in a country, whether you're even a corporation, to determine what you can build to accelerate progress. And we personally are using it to send medical and surgical teams to locations where the medical deserts are, the large populations of patients who need that ophthalmologist or that neurosurgeon or that gynecologist. And so that the people who are doing it, like myself, there are many in global health who are doing this work, know the place they can go to be most useful to the patient and most useful in passing on skill.
In just 10 seconds, so it wasn't so easy to do that before.
No.
And it was probably not unless somebody brought your attention to it.
Yes.
Or you got wind of it, but that's not the most productive way of doing it.
Exactly. This is to create efficiency and scale.
All right, got to leave it there. Dr. LaRovere, thank you so much.
Thank you.
Really appreciate it. Interim Chief Medical Officer at Boston Children's Hospital, Director of Innovation and Outcomes, and as we said, co-founder and president of the Virtue Foundation.
Hey, taking a look at markets off the worst levels of the day, but still red across the screen. The Nasdaq down 0.6%. The S&P 500 down 0.5 percentage point. The Dow down 0.4%.
All right, when we come back, we'll get a check on some of the specific stocks on the move on this Thursday. Don't go anywhere. This is Bloomberg Businessweek Daily.
You're listening to Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we've got just about coming up on an hour to go until we wrap up trading. I'm just looking at our Markets Live blog, and it says stocks hit by algo sales to weaken more into the month quarter end. So computer-generated accounts helping fuel a sell-off in stocks today. So we're bouncing around. We're off our best and worst levels, but down about 120 points on the NASDAQ 100, Tim, and 35 to the downside on the S&P 500.
I'm Tim Stenovec along with Carol Massar. Let's take a look at some stocks on the move today. With us is Bloomberg News cross-asset reporter Emily Graffeo. Emily, the Mag 7 taking a bit of a hit today. Among the worst movers when it comes to the Mag 7, an EV company. What do we call it, an EV company anymore?
Yeah, an EV company. And robotics and AI.
Yeah.
Technology.
Have you not seen like all that they do?
The standing robot, the humanoid robot.
I've seen what they sell, and it's mostly cars. We're talking about Tesla, right?
We're talking about Tesla, yes. Ticker TSLA. Biggest intraday drop since July. It was down over 5%. It's regained a little bit, but it's still down about 4%. After data showing that European sales of the car maker fell 22% in August. So that gives the company a market share in Europe of just 1.9%. This is a report from the European Automobile Manufacturers Association. We get this report every month. It actually often tends to move Tesla's stock price. And Europeans are still buying other EVs, but just not Teslas as much. We did see EV sales rise in the region in August, but the Tesla sales dropping.
Not so good. On the flip side, Intel continuing to have another good day.
Yeah, Intel extending gains for a third day. It's up 7%, and it's extending a gain after Bloomberg reported yesterday that the chip maker had approached Apple to ask for an investment. This is just the latest of a series of Intel headlines that we've gotten in the last couple weeks. The stock is up 36% over the last month, and this is ticker INTC, Intel. Our reporting is citing people familiar with the matter. The latest that we know now is that Apple and Intel have also discussed how to work more closely together, and that the talks are early stage and may not lead to an agreement. But the headline here is that Intel approached Apple for an investment.
Well, and it's our Mark Gurman said, because we were talking to him, like, why would Apple do it? And we really talked about kind of political clout. I was calling it presidential diplomacy or CEO presidential diplomacy, but it's kind of interesting. But he says, you know, tech CEOs, they kind of talk to each other all the time, these big tech guys.
Yeah, this would be, you know, like we said, the string in the latest of different investments. Obviously, last week we saw a $5 billion investment by Nvidia.
Yeah.
Into Intel, we've seen the actual U.S. government investing. And just for context here, I'm sure you guys know because you talk to a lot of tech analysts, but Apple was a longtime Intel customer, but then switched to in-house processors in the past 5 years. So maybe they're going back. Who knows?
Yeah, Mark had a really interesting point when we spoke to him about this, which was, Apple is smart about making U.S. investments right now.
Right.
And I was trying to look for any other reason why Apple would do this. And look, the reporting says there's been discussions about it at this point.
Yeah.
And there was really no other reason that Mark gave us. Maybe they could help with some of the many other less intricate chips that go into some of these devices, he did say. But
he did.
For the most part,
yeah,
politics.
Presidential diplomacy. But and we talked about this fiduciary responsibilities that CEOs of big publicly or all publicly held companies.
Said that.
Right. We talked about like having a relationship. It's not just this administration, but it is good to have a good relationship with the White House, right? Because whether it's a Democrat or a Republican or whatever, right?
Yeah, I mean, laws are made and then it affects the company and it affects the shareholders. So
Exactly. Where do you want to go? CarMax?
So Intel was the best performer in the S&P 500 today. The worst performer is CarMax, the used car retailer, plunging down 20% to 5-year lows. Bad earnings. They missed EPS, net sales, and operating revenue. And the street was pretty vocal about this earnings report. So Truist Financial Services said this was a, quote, miss across the board with, quote, really nothing good to see for CarMax. Used vehicle sales coming in at $5.27 billion, but that was down 7.2% year over year and also missed estimates. The auto retailer actually pointed to a fallout from Trump's tariffs and rising distress among consumers as it reported these earnings.
I don't understand the environment here because
I don't either.
I saw that too, Emily. And just in our program, Bloomberg Businessweek Daily, earlier on Thursday, we spoke with the CFO of Affirm, Rob O'Hare, who said the consumer is great right now. Everything we are seeing is fine.
I am so confused.
So if CarMax is out saying that the tariffs have caused this distress and people are pulling back,
right?
What are they? Look, a car is a big purchase, but
yeah,
if they're not seeing that at Affirm, then I don't know what gives.
I don't know. These are the crosshairs that we kind of like are dealing with.
It plays to the uncertainty. Even our very own Fed chair, Jerome Powell, was talking recently about just how much uncertainty there is for business leaders. So yeah, CarMax, ticker KMX, down now almost 20%.
Emily Graffeo, thank you so much. Be sure to check out our Stock Movers podcast, 5-minute episodes, because winners and losers in the market. Find it on Apple, Spotify, or anywhere you get your podcast. If you're watching on TV, the close is coming your way in just a moment. Tim and I continue on Bloomberg Businessweek Daily.